Disclaimer. This content is for educational purposes only and does not constitute financial advice. Always conduct your own research before making investment decisions. How much money do you need to start investing? The truth about getting started. How much money do you really need to start investing? Is it $1,000? $10,000? Maybe even $100,000? The answer might surprise you. One of the biggest myths about investing is that you need a lot of money before you can begin. In reality, thanks to modern investment platforms and fractional shares, many people can start investing with as little as $5 or $10. In this video, we'll explain how much money you actually need to start investing, where beginners should invest first, and the biggest mistakes to avoid when starting your investment journey. The biggest investing myth. Many people delay investing because they believe they need to save thousands of dollars first. Unfortunately, waiting can be one of the most expensive financial mistakes you can make. The reason is simple: time is one of the most powerful tools in investing. The earlier you begin, the more opportunity your investments have to benefit from compound growth. Even small, consistent investments made over many years can grow significantly. How much should beginners start with? There isn't a magic number. The best amount to start with is simply an amount you can invest consistently without affecting your daily finances. For some people, that might be $25 a month. For others, it could be $100, $250, or more. The important thing isn't the size of your first investment, it's building the habit of investing regularly. Consistency often matters more than starting with a large amount. Where should beginners invest? For most new investors, diversified investments are often a good starting point. Broad market ETFs and index funds provide exposure to many companies through a single investment, helping spread risk while keeping costs relatively low. Some investors also choose individual stocks, but these typically involve greater company-specific risk. As your knowledge grows, you can explore additional asset classes such as bonds or real estate investment trusts, also known as REITs, to further diversify your portfolio. Why investing small amounts works. Imagine investing $100 every month instead of waiting years to invest a larger sum. Through dollar cost averaging, you buy investments consistently regardless of market conditions. This strategy helps reduce emotional decision-making and allows your portfolio to grow gradually over time. Combined with compound growth, regular investing can become a powerful long-term wealth-building strategy. Common mistakes to avoid. Many beginners make the same mistakes. Waiting for the perfect time to invest. Trying to predict the market. Following investment trends on social media. Putting all their money into one stock. Or investing money they may need for short-term expenses. Instead, focus on investing consistently, diversifying your portfolio, and maintaining a long-term perspective. Final thoughts. So, how much money do you need to start investing? The honest answer is, less than most people think. You don't need to be wealthy. You don't need perfect timing. And you don't need to know everything before you begin. What matters most is starting with an amount you can comfortably afford, investing consistently, and allowing time to work in your favor. Remember, successful investing isn't about how much you start with, it's about developing good financial habits that you can maintain for years. If you found this video helpful, don't forget to like, subscribe, and share it with someone who's ready to start their investing journey. Thanks for watching, and I'll see you in the next video.